Welcome to Subramani. Let us see how the next bear market will be like. Some pundit whom you like or don't like would have come on television or running a blog or on Twitter and predicted the next bear market, saying the following stocks are overpriced and they will go down. And I have found in the bear market it is only certain industries which could just come down, like the 2003 to 2007 the FMCG and pharma did not participate in the run, so obviously they did not participate in the fall. The IT infrastructure, I mean, Wipro, Infosys, Tata Power, Kotak Bank, HDFC Bank and Cholamandalam Finance, all these participated, grew dramatically and obviously also fell. So similarly, somebody will come and give a right call, he would be a hero and he would not be known as a hero till then. And then he will say, look, I said this, I said this, I said this, and this would be true. He would become the new hero. Your existing pundits, your advisors, your gurus who come on television regularly, run blogs like this, or run Twitter handles, will not be able to help you. They will not be able to tell you what is going to happen. But the minute it happens, they will tell you why this has happened. Thirdly, there will be very good bargains in the market, but you won't have the guts to pull it off. Till then, you may have been cursing yourself for keeping too much money in debt or keeping too much money in cash, savings bank account, etc. for an emergency like this or for an opportunity like this. I am not talking of the emergency fund, I am talking of an opportunity for which this money could be used. But exactly that is the money that you will not use, because you will say, oh, I think the market is going to go down further. You will not have the guts to pull the trigger exactly when it should be pulled. It's a fact, right? So every bear market you go through and you realize, oh my God, Coal India was available at 110. You mean to tell me Indian Oil was available at 70? You mean Tata Power was available at 30? Yeah, all these shares prices are not very far away. If you've got a reasonably decent memory, all these prices you had heard maybe 2 years, 3 years back, you definitely heard all these prices. Maybe in 2021, I'm not even talking of 2020 during the COVID crisis. After that also these shares were available at these prices, but you will not have the guts to buy it, saying Tata Power will go to zero because they have this problem, etc, etc, etc. But then it went from 30 to 450. So that is what will happen. So the next bear market, what will be the other features? Everyone will start paying attention to your mistakes, and you will also pay attention to your mistakes, and you keep wondering, oh my God, why did I buy this share at such a high price? So your portfolio review, which should happen every 3 months or 2 months or 6 months, depending on the frequency with which you are happy, will now become important, and you will wonder, why did I buy this share at 30 rupees and when it went to 70 I didn't sell, now it is back to 22, what should I do? Do you have the guts to buy more? Maybe buy more. Go and re-look at the balance sheets, re-look at the reports that you have got, work out the cash flow, see whether it is worth buying. Don't buy just because it has fallen. Review it. Maybe at 22 it's a worth sell, or maybe at 22 it's a great steal and it's a fantastic buy. You don't know today, you will know only much later, right? No one will be able to tell you whether it will be one more thing is, when the bear market goes down, you will not know whether it is temporary or whether it is permanent. So we all assume that it is temporary, because from 2003 onwards we have seen that every fall is only temporary, which means 21 years. Somebody who comes and says, I've got 21 years experience, this 21-year experience guy has not seen a long bull run. So you will not know at the beginning whether it is going to be for 2 months, for 2 weeks, for 2 years. You wouldn't know, and you wouldn't even know whether you will have the mental capacity to keep investing if the market remains there for say 2 years. It's not your financial ability, it is your mental ability, because people around you will look and say, look, market has been doing nothing for the last 2 years, why do you still keep investing? And exactly at the end of 2 years, after you withdraw all the money from equities, the market will go up. These are all characteristics of a bear market. We have all seen it in the past. So this is what will happen. I can predict bear markets more easily than predicting what the investor will do. That is far more difficult to predict. A bear market is easy to predict. Could be anything going wrong. The government that you want is not not winning the election, or is winning the election with a lesser majority. Maybe they are not able to push through the reforms that you wanted. Maybe your favorite company or your favorite group lost a very important key man, and after that the group just disintegrated. All these things can happen. So you do not know how much of this is temporary and how much of this is permanent. Here, let's take a company from a big group. It is done badly, the results are not so good, and the prices fall 5%. Is it time for you to panic, sell and go, or are you going to say no, this is temporary, it's a big group, they will come back, they will support it, etc.? You don't know. Right now, take the case of Patanjali. You don't know whether the attack on it by the whole you call it the media, by their own behavior, by Supreme Court saying we will rip you apart, is it temporary or is it permanent? Is it a time to be buying Patanjali, or is it a time to be getting rid of Patanjali? Maybe you bought it at 850 and now you're sitting on good 500 rupee profit. Is it time to take the profit and run, or is it time to buy more shares and say I don't mind, I know I have the ability to wait? So the answers are known much later. I mean, I'm talking of a bear market, I'm talking of a single particular share also, not just the whole market what is happening, but also a single particular share in which you are interested, in which you have invested, or you're marked and said now the price is 1350. When the Patanjali share falls to 1000 or maybe 1100, that's the time I will buy. When it actually hits that price, will you have the ability to press the trigger? That is what I said, the ability to press the trigger is very important, and we may not have the guts to do that. Investors will make short-term decisions based on the even when you are investing for the long term, the immediate short-term hurt which you had of the market falling for the last say 10 days or 5 days is going to impact you, even though the decision you are making is for the long term. So the short-term indicators become a very important part of your long-term decision making. That is what behavioral investors call the recency effect. You think, oh, market has fallen 5% last month, so if it falls 5% every month for the next 1 year, then it will fall 60%. Wrong. That is misuse of statistics, right? Or you say, oh my God, gold has done so well this year, so I should put more money in gold. Maybe it's a good decision, maybe it's a bad decision, but just check whether you're overbuying gold, because if you have put money, let's say you put 30 lakhs into multi-asset fund which has gold 10%, so 3 lakhs of your money is all gone into gold there. So when you're buying some bonds, government bonds, which is gold bonds, sovereign gold bonds, just check out how much of gold you already have, because in a bull market it looks very smart that you have got sovereign gold bonds, you have got physical gold, you have got your family jewels, you've got everything. So fantastic when SGB is doing well, but when it starts going down or it does not go up at all, then the returns on that can look very bad. Then your multi-asset fund also comes down because one portion of it, maybe 10%, is not performing, right? So at those times to take decisions is not going to be easy. Is gold a good buy or a good sell? If it's a good market where it has gone up dramatically or substantially, maybe it's a good time to sell, but there is nothing to say it can't go up further. Ultimately it's a commodity, so if like any other commodity, it is a question of demand and supply. So if the demand for gold at higher prices is even more central governments buying, then it could go up. There is no fixed pattern as to how gold will behave in the future just because you know how it has behaved in the past, right? People will then start wondering that should I put some money in swan funds? Should I put money in some people who have destroyed wealth quite a bit, but occasionally during such bad times they've created some 731% return, which is enough to cover all their mistakes of the past 5 years. Should I invest in such a fund? Should I put a small amount? Should I do a SIP into it? Right? These are questions which you will never be able to never be able to answer. One thing which will come out very clearly, which you may or may not agree, is the need for a good investment advisor, even if you are a pure equity investor. Like I have friends who would call me, we'll chat about they are investing in direct equity. I have nothing to do with that. I have no role in anybody's investment life, but we do carry on long conversations about investments in direct equity also, right? So obviously I'm not a broker, I'm not an advisor, but we still chat about it. Some people will definitely blame luck. Some people will panic. Some people will say, oh, you're talking nonsense. My mother was in the hospital. I needed money. What could I have done? You could have done a lot of things. If you had taken proper amount of insurance for your mother when she was eligible for getting that insurance, you would not have been selling in a case of selling your equity shares in case of an emergency. If you had established an emergency fund, you would have had some money to withdraw from, some place from which to withdraw, so that you can replenish it later, and this asset would not have been a asset with a high standard deviation, right? All these things were possible, so all these things will happen. So this is predicting a bear market. I am not putting a date to it. Thank you.